Welcome back to Fresh Economic Thinking. You're with Cameron Murray. Today I have Aziz Sunderji. You might not know him. He's a Substack writer. He writes the terrific Substack Home Economics. And we thought we'd get together as a bit of a collab of Substack authors puzzling over all those tough economic questions about housing. So Aziz, thanks for joining us.
Thanks for having me.
Maybe you should introduce yourself. How does one get into the sphere of writing about housing economics online? Where did you come from? Is there a quick Cliff's Notes version of getting sucked into the vortex of doing similar things online?
Yeah, so I spent many years working in the bond markets, doing research on bond markets in Europe and in emerging markets for a big investment bank. And I think the reason I left the financial world and I got into this world and eventually found my way into housing, it kind of relates to a lot of your views about the housing market. And what basically happened was that I spent many years in the bond market analyzing lots of data, trying to advise institutional investors, big investors, mutual funds, pension funds, sovereign wealth, hedge funds, about what to do with their bond portfolios.
Mm-hmm.
And the idea was that by doing a lot of really hard work and going through the data and thinking about all the angles, I can come up with some views that will allow them to buy or sell bonds in a way that will make them outperform the market. And that seemed very compelling to me. That was very exciting. And the pay was wonderful. It was a great lifestyle. But I did that for a bunch of years before I noticed this what seemed to be a fact about the world, which was that I think I was a pretty good strategist. I think my calls were mostly pretty good, but I got it wrong a ton.
Mm.
And I noticed that my clients also got it wrong all the time, maybe more often than not. And then I started looking at the performance of what we call active investors, right? People who are buying and selling the
Mm-hmm.
market, trying to take advantage of views. And I realized actually their performance is really bad. These investors are mostly they get it right, they get it wrong sometimes, but
Yep.
after they charge fees to their end investors, their clients, most people are better off just investing in the market passively. And I came to kind of understand that markets are efficient in that, if you go into the market and you look at the price of any, government bonds issued by like Brazil, for example,
Mm-hmm.
it's probably the right price reflected there, because it reflects all public information, and you've had millions of investors with billions, trillions of dollars behind them, arbitraging different bonds such that the prices you see out there are pretty much the right price. And if you second guess that, I mean, unless you have some special sauce,
Yeah.
you're probably going to be wrong. Um, the sorry,
Do you think that you realize that translates into housing as well, or is that the link?
the link is that I do think it translates to housing, and let's get to you. So I think that one of the reasons that we're a little bit I don't know, intellectually simpatico, that I don't find you, I think you're a controversial guy in many quarters. I don't actually find your views that controversial. And I think that maybe the reason is that I come at this from a finance angle. And
Mhm.
I think from an asset pricing perspective, your views are actually they're pretty orthodox. They're actually like much more orthodox than um, some of the contrary views about how, supply might lower the
Yeah.
cost of housing.
Well, I'm glad to
So
hear
anyhow,
that.
that
I feel like I'm orthodox, Aziz. Like, obviously, everyone thinks their way of thinking is the sensible way, but it's not. It's nice to hear it because a lot of people tell me I'm crazy on the internet every day. So welcome
yeah,
to the
some people
club.
accuse you. Thank you. Some people accuse you of getting your economics degree from like the back of a cornflakes box, right? Isn't that a
Yeah, that's
common insult leveled at you?
yeah, yeah, yeah. I mean, I kind of enjoy it now. Sort of shows someone's not prepared to um, think a little bit deeper. Yeah. So I guess the common theme we have is that you saw in bond markets that markets are pretty good at getting the right price. And in housing, that seems to be true. So all these ideas we have of housing's are unaffordable, houses are the wrong price, your attitude is, how do you know it's the wrong price? Like, what is the right price, and how would you know? Like, I've spent a decade trying to puzzle this question, and you guys can somehow just assume it and be confident about that. Is that sort of the vibe you have in the housing debates at the moment?
Yeah, I mean, I think that what I think this is just like the way I think about things. Um, I tend to like to have frameworks, or for people who are
Mhm.
explaining things to me to have their own frameworks that are coherent. And as I got in more into the housing market, I kind of, after I left the world of bonds and was writing about all these other things, I realized the housing market is actually a pretty interesting one, because I think it is less efficient than bond markets. And I think that there's so many interesting angles to explore in it. There's so much data to be exploited. I love data visualization. There's a lot of data. Um, but one of the things I like about your work in particular is that you seem to have a really good framework. You seem to have at least a coherent framework, whether people agree with your views or not. Um, they hold together. Like, you have a model of the world, and it might be the wrong model. Like, I'm not here to say it's the best. I think there are many parts of it that make a lot of sense. I also have questions about it, but at
Okay,
least
we
it's a
should.
coherent model. And I find that lacking elsewhere. And in particular, I'm like, I don't want to, I feel like this could go down the road of us like spending an hour trashing YIMBYs. Um, but one of the things that I got that I'm a little bit frustrated by when I look at the literature out there and the different views is that um, the, the people who often criticize your point of view or an asset pricing model of housing, or whatever you want to call it, it I think they don't seem to have a framework, and there seems to be a real dearth of empirical evidence to back up their views. And so I came at this pretty agnostically, but as I'm getting more into the literature, because I'm still relatively new to the housing world and trying
Mm.
to be open to every point of view and understand what's really going on, I'm constantly perplexed by some of the views out there about zoning in particular. And yeah, I don't agree with everything you say, but I really appreciate that you have a coherent view and you're pretty good at communicating it.
Thank you. Well, why don't we get into that and see if we can find where we agree and disagree on those things. So I'm going to ask one of the questions you were going to propose to me of, is there a crisis? Now, um, people, as I say in my book, The Great Housing Hijack, I hate the word affordability because, of course, there's unaffordable areas, there's affordable areas. Everyone's income is different. That's the whole point of markets, right? To organize us into locations and cities and households. And of course, that's, some places are unaffordable to some people. That's how the market works. So, in your view, how do you interpret what the crisis is right now? Or is there a crisis? Is it like an asset pricing thing? Is it a crisis that the prices are wrong, or is it a rental crisis, or is it an adjustment process with winners and losers? What's your view? And then maybe we'll see if that's similar to mine.
Hmm. I I think that there are some indicators that are confusing, are worrying, are indicative of the potential for there being a housing crisis. Um, One thing is that I agree with you in your view that the price to income ratio is kind of a nonsensical way of looking at this issue, that rents to income make a lot more sense. Um, um,
Do you want to just explain why, or where you've seen that, why it sends people astray? Because some people, like I say it, they kind of get it, and then they keep using price to income, going, "Oh, it's good enough, it's close enough." Like,
well, I think like I think uh, um, there's a huge missing piece when you talk about prices and incomes, which is the cost of financing this asset, which is a house. And you can have a house that's $1 million when interest rates are 2%, as they were recently, and that's pretty cheap. I'm lucky. I own an apartment in Brooklyn. It's a very expensive part of the world, but I got in luckily through no genius. Just that was the time when I wanted to buy, when there was kind of a when inflation was extremely low, rates were extremely low, and so as a result, I'm paying very very low housing costs right now. My housing is cheap.
mm,
My I got a I mean, not to get into too far into it, but I got a 7-1 ARM IO. I got a mortgage that resets to the prevailing interest rate after 7 years. I bought 7 years ago. In November, my cost of housing is going to quadruple,
Wow.
almost quadruple, because of how much interest rates have moved. Luckily, I'm planning to move out of here before then, just for personal reasons.
Yeah.
Um, but um, but yeah, the cost of housing has to take into account both the price and interest rates. And it's a really nice, simple way of talking about the market, but it doesn't really reflect the cost of housing.
Yeah, I do find that it's especially comparing between countries with different interest rate and inflation regimes and risks and you sort of get that in premium suburbs as well. Like, the cities are expensive. I'm like, yeah, they're low yield because they're low risk, right? Of course, the yield's higher in a regional town where, they're more susceptible to an industrial boom and bust cycle. So you think rents are better for affordability. So is there a rental crisis though? Because don't we also agree that rents are pretty flat as a share of household income?
Yeah. So let me mention a couple other things that
Hmm.
I think are worrying before giving you my view here. So the vacancy rate is really low. I don't really understand that.
Can you just
Or
also
at least
clarify, do you mean vacancy as in number of advertised homes or number of empty homes? Because we have this debate in Australia of, oh, the
mm,
vacancy rate's low, and it's a measure of rental ads that have been posted longer than 3 weeks online. It's not like how many unoccupied homes there are, which may or may not be advertised for rent or sale. Which one are
mm,
you referring to?
I'm not sure actually. I think the former, but
Okay.
uh, this betrays my ignorance about how vacancy rates are measured in the States at least.
Yep.
I will. Another thing that's a bit of a head scratcher and kind of points to something bad happening. It may not be a housing crisis, maybe something else bad happening, but
Hmm.
um, the ownership rate that most people talk about is like 65 to 68%, and it's been pretty stable for a long time. And so you look at that and be like, I don't know, the same proportion of the population owns a home, so it's hard to imagine why there's a housing crisis. But that's if you're measuring the denominator as the number of households. So, like the number of home
Yep.
owning households divided by the total number of households. But if you measure it as the population, the number of owning people divided by total people, that number is actually going down. And the reason is that fewer people are striking out to start their own households. So if someone does start a household,
Mm.
they're tending to own a household at the same rate they always have. But to begin with, fewer people are starting their own households. They're living with their parents, they're living with roommates, etc.
Yeah, I this is one of those puzzles that I hear a lot. It's like, oh yeah, young people stay at home because housing's expensive, and then you end up with looking at the data that actually outside of the premium suburbs and premium cities, young people just move out all the time, have lots of babies, right? Housing's a no big deal. So the question is, well, why? Where's the spatial constraint here on you moving to a cheaper place to start a household? Like, why is it that um, in Australia, we often say young people go to the UK and they work and then they come back to have babies, right? Because it's a
Mhm.
better lifestyle. Why isn't it the fact that people move to better suburbs and cities to have children? Move out of you're moving out of the city. Is that your plan? Like that's what all my mates did. So how is it a
Yeah.
constraint that expensive places are expensive, but you can move wherever you want? That's what puzzles me.
Well, there's a premium on urban housing, and that premium reflects, for the most part, I think, the greater economic opportunities that come with living in cities.
Of course.
The fact is, if you want to work at the forefront of whatever industry you're working in, chances are the opportunities are in a big city.
Mm.
And I guess it depends on what do you think about economic opportunity? Like, do you think that that's like a human right, or everybody should have the ability to live in a place where there are economic opportunities?
Well, I mean, I don't think much of our economy is compatible with that idea, right? Like we allocate spaces by price, not by need. And that's what I find is a big assumption in housing debates, is that, for example, we have the case where older people are richer and therefore they have bigger houses relative to their households. And so you have these big demographic trends going on in the background, and everyone says, oh, that's not fair. You know, they've got all these spare bedrooms, but young people can't afford them. I'm like, yeah, I agree with that. However, do you want to allocate houses on price, or by have a dictator go, you have 3 kids, I'm
Yeah,
reorganizing who's got who? Because you can't sort of have, well, you can't really have both, right? Like you either believe that prices allocate well, and
mhm.
therefore rich people cluster together in rich suburbs and poor people in poor places, and never the two shall meet. Or you think, oh, actually, we don't like prices allocating. We need, in addition to prices, some other method so that people
Yeah.
can live in expensive places and if they're not rich. And I do find that's a real sort of unspoken deep assumption in there. Like, going back to the Yimbys, they all go, oh, if we upzoned everywhere, poor people would live next to rich people. And I look around and I go, when does this happen? Don't poor people cluster together because rich people all move somewhere else? Like, if poor people
Yeah.
move in, rich people will leave. You can't stop this.
Yeah.
Like, this is how markets allocate. Everyone can voluntarily reorganize where they live. So I do find that's like this
I
unwritten distributional assumption in there. Oh, markets will redistribute and become fairer if you unleash them. And I'm like, I'm not sure about that.
No, I don't agree with that. I think that markets allocate it according to ability to pay,
Yeah,
and
yeah,
that's
of
mostly
course.
fine.
And I'm, yeah,
That's how it works.
I totally on board. It's
I
mostly
live in
fine, and
America.
that's
This is
good.
Yeah, yeah. America is the heart of that kind of thinking, and it's a very dynamic place. I'm Canadian, but the economic opportunity here is incredible, partly because markets function really well. And I don't have a problem with that. If you want to get like Broadway tickets here, it'll cost you like thousands of dollars. You want to go see Hamilton, and you decide that like without 2 years of advance, you're gonna pay thousands of dollars for a ticket, and like
Yeah. Is the market
that's okay.
stopping
It's a
people? Is that
luxury.
because of regulations, though? Is that because of regulations? Can't anyone put on a Hamilton show? And how do Yimbys explain that?
No, clearly you haven't seen Hamilton. um, uh, I have no problem
Anyway.
with the market allocating according to ability. However, there are some domains in which we think that that's not the best mechanism for distributing access to a service or a good, because these things are, what do you want, fundamental human rights or something
Yeah.
like that. Education, which is provided by the government, healthcare, which in many places provided by the government, and for the poorest here in America by the government. And I think that one of the reasons housing is a tricky thing is that it is. I think many people think of it as a fundamental human right, but it's priced according to asset pricing models,
Hmm.
and that's an implicit problem made explicit. And to be honest, I don't know what the answer is. I think to get to your question again, is there a housing crisis? I don't think there is a housing crisis for most people. I think
Mm.
there is a housing crisis for the bottom segment of society. I'm not sure whether that's the bottom 10 or the bottom 25%. I'm not sure about that. In urban places, it probably reaches up higher. But I do think for a certain segment of the population, um, it is a problem. And when we think about, if we think about housing as a human right, everyone should have a place to live. That's a demographic that should not, I think, be subjected to the whims of the market.
Yeah. Interesting. Yeah. We're pretty close on this here. I think my refined view of what this crisis is, I'm totally with you that for most people it's not, right? Like in Australia, it's 67% homeowners. Every time prices go up, they're better off, right? They're avoiding, and rents as well, like because the rents avoided from being a homeowner are higher, right? So the
Yeah.
benefit is higher from owning. Most renters are totally fine as well, right? We have 31% or so private renters. I would say half of them are doing fine. I mean, they're the reason rents are going up because they're moving into the cities with their new jobs and outbidding the people who used to be there who don't have higher incomes at the moment.
Mhm.
So for me, I think you're right. The housing crisis is just the bottom part of the rental market in certain cities where incomes have adjusted very quickly but unevenly. And so
Mhm.
if everyone's showing up to rent, has this newer, higher distribution of income, and everyone who's currently there, maybe a few people's incomes have risen, but others haven't, then you're going to get pushed down this ladder. And there's a geographic element to that. You're going to get pushed out in the suburbs. You'll be unhappy about that. And then there's a pure price effect as well. And I feel like that's the real issue that that I think is fundamentally a human welfare concern. I don't mind if prices go up and down in the markets. Everyone's taking risks, but it's that adjustment process when incomes rise unevenly that has winners and losers. So that's why I'm a big fan of getting people out of private rental market, like into some non-market, more secure option. As you say, if housing's a human right, we should think about how to do that, but also smoothing out rents with, rent controls that limit how quickly you can raise prices on sitting tenants, which I think is also a fair way to minimize that disruption. So yeah, but and here's the thing, right? We have this perverse debate where we think it's politically feasible and desirable to fix this crisis of, let's say, 10 to 15% of households by wiping off trillions and trillions of dollars of value from the vast majority of households, much more on all the landlords and institutional, owners of housing, wipe off trillions of value, tens of billions in revenue each year from their rents. Like, do we really think that that's going to happen? Oh, if we change a zoning rule here and this here, in Australia, it's something like 60 or $70 billion a year in rental income for those landlords. Are we really going, oh, let's just change this law here, and then, sorry guys, I'm just taking $30 billion of your annual income from you, and they're going to sit around and take it and go, great, I'm glad we all solved that problem we all have. Doesn't make sense to me.
Yeah, I mean, you talk a lot about the symmetry of the market being a little bit ignored. I agree with that. But one thing I wanted to ask you is, I feel like in the States, there's certainly that that issue that homeowners don't want to see a loss in the value of their biggest retirement savings vehicle, right? But in the popular conversation, I feel like that's almost secondary, I think, to the concerns that people have about neighborhood change. And I'm not sure if this is like an Australia versus US thing, but I think here the concerns, if you go to community board meetings from quote unquote NIMBYs, is partly about housing prices, but often more about a change in the character of the neighborhood, worries, fears about the types of changes that happen when more affordable houses are near people who are generally pretty wealthy. But that's something that I feel that I think you talk about a little bit, but you talk about a lot less than symmetries and the risk that property prices fall and the unpopularity of that.
Yeah, well, I think we're talking about two different dimensions, right? So there's the pricing dimension of the whole market, and then there's the composition of where things are and where people are clustered in their suburbs, right? And I feel like a lot of the debate is, oh, if we change where people live on this dimension, it's going to fix this dimension. I'm like, how? Why? Like, tell me, where's your theory there? We have this kind of theory of density, but not a theory of quantity or price, right? It's all muddled up when in these conversations, which is, of course, why I tried to write a book about it and try offer a coherent view. So my view on people's concern about change. So is your argument that, homeowners are often against change in their neighborhoods, even if it increases the value of their asset?
I don't have data on this, so it's hard for me to say like categorically, but my sense is that I think yes. I mean, if I had to guess, I would say yeah. I think that homeowners would be willing to give up a certain price in the certain value of their home in order for continuity of like character or whatever you want to call it.
Yeah, it's a really tricky phenomenon, and it doesn't just happen in housing. This happens in agricultural areas as well in Australia. All the farmers go, protect, what do they call it? Protect a high value farmland, right? From development. Protect. And then it's time for them to retire. And they're like, no. This is the best place for high value housing development. Forget the farmland, right? So there's a little bit of that, and that's a common issue everywhere. But I think a lot of the frustration is this, and I've actually got multiple drafts of articles and papers on this. You know, spatially, people move to where it maximizes their benefit, right? Trading off all the costs, transport, housing quality, location, amenity, right? So you've gone and you've made this trade off of all these different things, right? And then you move into a suburb, and then the city planners go, oh, no, actually, guys, this is where we want to change the suburb that you've just traded into and made all these trade-offs in your life to a different one that you didn't choose, that you could have chosen by moving to that neighboring suburb, but you chose not to. And you've moved here, and now we're going to change this one to be the same as that one. You're like, well, hang on a minute. If I wanted to live amongst high rises, I would have just bought there in the first place, right? But I've chosen not to because across the market, we all have different preferences. And so you end up with this kind of preference mismatch between the people who live in a place and the people who might want to move there. And they're like, well, I moved here because these are my preferences, and now you're changing them. And I think that's a common view. And I'm not really against having the arguments about urban growth and planning. I actually think there's a bit of public benefit to having it. Like, we should thrash out ideas and go, oh, if you're going to do that, we should have this, and we should protect these streets, but these areas can go. And if we're going to develop, I don't want to go from houses to high rises. Is there something in the middle? I think it's better to have residents and communities that care about what's happening than the opposite. And I think the opposite would be terrible. I there are lots of trade-offs, right? And the idea that if we just get out of the way, that the private landowners will somehow coordinate onto this great outcome that improves not only their economic gains for their little patch, but also the economic gains for everyone else in the neighborhood. I don't think that's automatic, right? I think that actually needs some planning, coordination, investment, some binding rules that say, hey guys, over here you can only do this, but if you offer something to the public, we can do this, and find those win-wins through the planning system. I think that's totally fine. And it's interesting because where I live in Brisbane, I know, which is on the east coast of Australia, 1,000 kilometers north of Sydney, I know the planning system really well, and it's super flexible. My mate just got approved, right, on an industrial zoned area for like 800 apartments in a shopping center. Totally against the planning scheme, because we have a process to allow, right, any proposal to be put forward. And it's like a review process. Like, is this going to be really terrible? Literally, I think they only got one or two complaints and hundreds of supporting letters from the community. And they put it, it's a risk, right? And off you go. And people then come and tell me, oh, the planning scheme in Brisbane's just constraining everything and it's terrible, right? I'm like, no, it's quite a functional review system to make sure that change has a collective benefit as well as a private benefit. And I think finding those win-wins is a good thing about planning. We had cities before modern town planning, and the major problems were slums, right?
Mm-hmm.
We literally demolished huge chunks of them because there were disease, rodent infested slums that would burn down and fall down and kill people routinely, right? So I'm not against arguing about how to do this, but I'm sort of against saying, well, that process somehow inhibits what the market, it's going to inhibit the shape of what the market would do, but shape and quantity, again, they're different dimensions.
They're different, yeah. Can I tell you about so I'm at home right now. I live in Brooklyn in Park Slope, but I work in an area called Gowanus, and there's something really interesting happening there. And can I tell you about that? And then maybe I want to get your view. If you run these facts through your model, like can you explain what's happening here? So Gowanus is an area that's historically very industrial. There's a Gowanus Canal there where there's lots of industry there, and they dump lots of crap into the canal there. There are supposedly lots of dead bodies at the bottom there, and historically not a desirable place to live. But then they started cleaning up the canal, and several years ago it was rezoned from industrial to commercial slash residential. And alongside that, the government, state government, I believe, also offered developers tax abatements. And what you had was an area that was like pretty just devoid of anything. It was really
Mhm.
formerly industrial land that was now just lying fallow. Is now it looks like Dubai. Or it looks like Manhattan. There's like tons of construction everywhere, huge buildings,
Mhm.
chunks of which are reserved for affordable units, and it's happened very, very quickly.
Mhm.
Um, what this seems like a pretty good thing.
Yeah.
And it seems to have resulted from a change in zoning.
Yeah. Of course.
So what do you think about that?
Yeah, of course. I mean, you can definitely ban uh, being building houses in a country. You can definitely ban it from certain areas, and that's going to stop it. And then you can allow it in certain areas, and then you can incentivize it. And I guess the way I see it is, I'm not for banning homes. I'm for regulating spatially where they go. Just like on the road, I'm not anti using roads, but I'm very pro lanes and traffic lights and all these rules, really, really burdensome rules on the road to organize where things go. Okay, we should do that for stationary objects too. That's fine. And we should do it relatively efficiently. And I do have lots of complaints about planning in general. We should focus on the bigger picture questions, not that we often get bogged down on, oh, the driveway is the wrong dimension or something. I'm like, yeah, that's not the question planning should respond to. So your example, I mean, I live in a suburb like that, right? So my suburb's gone from 8,000 to 28,000 people in the last 20 years. I can see, I'm just literally looking at probably 150 apartments out my window that used to be an old gas tower and a few other warehouses. And I guess what we have to understand is that, yeah, we can regulate the location, but we're not regulating the quantity. So the rate at which people are building out that area is regulated by how quickly people will buy it. If no one bought it, it still wouldn't be built, right? So, and everybody who bought apartments in that area, do you know what they didn't do? They didn't buy apartments in another area where someone's got a big block and they're sitting there going, oh, I wish we could do this mega project, but I'm going to wait till that one's done because there's no point me doing the same thing in the next industrial suburb while you're doing yours. Right. So there's a lot of offsetting effects that are invisible. And that's, the economic insight of the seen and the unseen. People go, oh, look, we transformed a McDonald's into 100 apartments. I'm like, well, you transformed that location into 100 apartments. That doesn't mean you added 100 extra to what the counterfactual would have been across all the alternative McDonald's sites that could be redeveloped but aren't being redeveloped. And so that's where I end up at this point where, yeah, of course, we can have boom and bust cycles and we can regulate where things go, but it's really a demand led thing how quickly we build. And some areas are more susceptible to boom and busts in demand, and some are not. But planning doesn't regulate how quickly you can do things out of all that stock of feasible sites. So let's just say in Brisbane, where I live, there are about 500,000 potential detached housing lots you can build still in the city under current zoning. And there's probably about 500,000 detached existing houses. But we only build like 8 to 12,000 per year. And in a low year, maybe it's 4,000, and in a high year, it's 13 or 14,000. That pace is what supply is. And it's at all different locations because of planning rules. That pace is really dictated by market demand, right?
Mm-hmm.
At the time.
But you're in favor of, if I'm not mistaken, you're in favor of some policy tweaks that induce people to accelerate the pace of development. Is that right?
Yeah, look, I'd really love it if there were good ones. So I'm definitely big on land taxes, right? I don't think any economist who's really thought about it is against land taxes. I actually think it's the transition to land taxes. So we're doing this in Victoria, in Australia, which is where Melbourne is, that state. They've broadened their land tax, and a lot of churn is happening in ownership. People selling all their undeveloped sites that they've been waiting on, because now instead of 2,000 a year, they're paying 10,000 a year. Um, so I think there might be this acceleration during the adjustment period, but I'm not sure you can actually sustain that for very long because prices adjust, right? To prices incorporate that information, and then you get the same intertemporal trade-off once again. So I'm definitely keen. What I'm also keen on in planning is when you upzone and you take that industrial land and you go, yeah, let's build it here, that the community shares in the value created to fund public works. And I'm very wary of, oh, just upzone here. Well, you're kind of giving a new property right to this property owner through the rule change that's worth a lot of money for free. Like you should be very wary of doing that. Just like we wouldn't privatize a public park that's next door so you could build more houses on your lot, we're privatizing the air volume above you for free, even though it's worth the same as the park next door. We should be charging for that and sharing in those gains. And I'm wary um, that the naive upzoning story overlooks these points.
Like going back to this, what's happening in Gowanus and like following this through your model to be the end result. So your model suggests that changes in zoning regulation can change the location and the type of housing that's built, but not
Mhm.
the total quantity. And that makes sense to me. Uh, in this case, because these huge towers were built in Gowanus, the model suggests that was development that would have happened elsewhere, but is now because of a change in zoning happening in Gowanus. Is that right?
Essentially, yeah, yeah. And here's the thing, right? Adding extra dwellings to New York allows more people to move in to the region, right? And so
Mhm.
that has also pressures in the broader sort of migration catchment or the broader um, sort of market, as you would.
Yeah.
Yeah, so that's definitely true. And so in terms of changing the location, you can think of this as there's a whole bunch of sites queued up in a sequence like a checkout queue, and you've got the most sort of profitable or ripe ones near the start, and then you've got some down the line that could jump the queue, and then you simply just chuck some at the front of the queue and go, here's some in a really high location where the residual after investment's very high and there's going to be lots of buyers, and they just push up, and that invisible part is everyone else getting pushed back 3 or 4 places in the queue.
Right. One of the reasons I don't fully understand the all of your model. Also don't fully understand the let's upzone to spur supply argument. But one thing I can't get too like uh, enthusiastic about pushing back against upzoning, because I think that I don't think it. My sense is that the real crisis, getting back to our question of the crisis, the real crisis is amongst the poorest members of society, and I think targeted action to help them is what we need. And I think the process of changing zoning to hopefully get more supply, whether you believe that will happen or not, and that
Yeah.
filtering through to more building, and that filtering through to the lowest rungs of society, that seems like a really circuitous way of helping these people that we know need help, like now, the bottom 10%, the bottom 20%, whatever you want to call it. But I do think that I don't think like upzoning is problematic, and I do think from this angle, from the Gowanus angle, kind of what thing happening, it's a good, depending on what you think about cities, but based on
Yeah.
what I think about cities, that they're good, and we should give people a seat at the table at the heart of the economy geographically. That it's kind of a good thing. Yeah, maybe we displaced housing from I don't know, Scarsdale Hill or something, somewhere on the outskirts of the city into Gowanus. It didn't overall increase the housing supply. It didn't change the median equilibrium price of
Yeah.
housing, but we end up with more people living in the center of the city than would otherwise have been the case. And
Yeah.
that seems like a pretty good thing to me.
Well, I mean, if that's the problem you're trying to solve, then that's a good thing. Uh, and I've had many of the smarter Yimbys tell me, oh, but at the end of the day, if we have more density, that's good in and of its own. And I'm like, well, okay, well, if you think that's good, that's a good outcome. Some people don't think that's good. That's why they don't like it. But none of this is related to the rent or the price across the market as a whole, or redistributing the way we can access housing that is currently, allocated by price. So yeah, if that is your social planner's objective, your welfare maximizing objective is density is good for its own sake, then yeah, we should try and we could probably restrict urban sprawl and subsidize density. You know what I mean? Like we can go even
Yeah,
further.
yeah,
We can, if density is good for its own sake, you can just go and build public high density housing. Like there's there's many also
yeah,
more direct ways to get that if that's your outcome. So I'm not against density, but this is my warning, and this is what worries me. Um, People think it's free. People think upzoning is a free policy. It doesn't cost the government budget. Therefore, if it's free and it's got potential upside for more density, even if it displaces other things, it's a win-win. My response is it is not free. It costs you exactly dollar for dollar the additional value gain from every property owner whose zoning is changed. And we know it costs dollar for dollar because you can sell air rights at a market price, and that can be budgetary revenue for whichever level of government. And by not doing that, it is essentially costing you dollar for dollar many billions of dollars. And so I've calculated in
yeah,
Australia, it's something like $19 billion a year if we sold upzoning rights. And I can calculate that because we have the ACT, which is where the capital Canberra is, that does do this. And in fact, they have a public housing developer does all the detached housing subdivision, and they pay $280 million dividend to the government each year from doing that. So we sort of know that we're giving up this thing. And I just feel like if the problem is distributional, right? If the rental crisis problem is distributional and the solution is a redistribution from the collective to the selected upzone landowners by not pricing up zoning, you're also just kind of working against that distributional gain that you want to get. Yes, you're working towards a density gain, but I don't think many people actually think density is good for its own sake, right? There are certainly efficiency arguments that, oh, well, clustering obviously has efficiency gains, otherwise people wouldn't do it, and prohibiting that, you can make externality arguments why you'd want to
that's
prohibit it in
yeah,
certain cases,
yeah,
and you can make efficiency arguments about, well, because of the existing stock of capital, the transition cost to put all these services underground or extend a subway line rather than build a surface road. And I think there where we should have the arguments, like I know in Brisbane, we go, oh, we need a new road. Okay, well, we've got to build a tunnel. There's $3 billion. I'm like, well, we didn't, 3 billion gets you a long way in a new suburb, right? For new infrastructure, rather than putting a tunnel under an existing bunch of buildings. So these are good conversations to have. But that's not really where we are on the YIMBY housing debate, right? Very different conversation. It's not about urban efficiency and infrastructure
yeah,
costs and the trade-offs. For some people, it is. For a small group of really switched on analysts, but not in the greater public and political debate.
yeah. But I personally think that there are huge externalities and huge clustering effects, and these are really beneficial. And that when we in the presence of externalities, the government does expend money to encourage them because they'll be undersupplied by the market. So maybe you're making that argument about people move to the suburbs and that's what they opt into. They're
Mm.
they're acting according to their preferences, and we might go and tell them, no, we're going to like upzone this and build higher, and they're like, no, we moved out here for a reason. Well, I kind of feel like that with New York. Like I moved here for a reason. I live here for a reason. I want I love density. I think density is great from many angles, environmental, economic, etc. And if one outcome of upzoning efforts is maybe not an impact on prices, but an impact, even at the expense of some handouts to incumbent owners, more density, I just can't get too upset about that. But I
Fair
want to
enough.
ask you about
Fair
this.
enough. Yeah.
Let's change tack. I want to ask you about something else. This 30% threshold that people have decided is if you're spending more than 30% of your
Oh,
income
yeah.
on rent, you're burdened. If it's more than 50%, you're burdened. What do you, I have some thoughts about that, but what do you think about that?
Yeah,
Does it make sense?
I hate arbitrary, I hate arbitrary thresholds. I hate them. I hate poverty's gone down because the number of people living on $1 a day has gone down. I'm like, yeah, okay, can't we just show the full distribution from these surveys? And like, um, this this one point's not going to tell us much. And of course, you can solve. Um, the easiest way to then solve those problems is get all the people spending 32, 33% and subsidize them a few percent, right? And then get them to 29%. I'm like, well, what about the people spending 40%? Are you willing to subsidize them even more? Um, Again, this is a sort of like reflecting an equilibrium without understanding it. So in the market, there's an equilibrium outcome, but that equilibrium outcome is not a point, right? If we take the median rent to income and go, oh, the median's 25%, therefore above 30 is bad, below 20 is good. Well, that median is it's actually this banana shaped distribution. If you've got household income on the bottom and rent to income on the top, you've got lower income households spending more and higher income households spending less. And people do choose that voluntarily in a lot of cases, right? You can pay more rent to have reduced travel costs because of, the job you have. It's worth making that trade-off, right? And vice versa. You might have a low rent to income, but impose huge costs having a 3-car household and long commutes and whatnot. And that's your trade-off. So I don't think it's a particularly useful measure. And this is where we sort of show the limits to our ignorance in housing. No one really knows where rents come from. Uh, like I often ask the Yimbys this question, which is, you keep saying rents should be lower, but everyone who lives in the houses, every renter who lives where they are could stay exactly where they are and pay half as much if they all agreed to, right? You just put a sticker on the door and say, I'm paying 2,000 a month, uh, but anyone who moves here should only pay 1,000, right? You should be able to just pay less and be at the same distribution of where we live. So why is it that there's this pressure to put rents up? And I think there's the insight there is that housing's not just an item like a TV that should fall in price as we get better at making it, right? Everyone goes, well, of course rent to income should fall. No one would say, the price of clothes to income should rise over time or stay flat. It should fall. They're missing that housing's not just an item, but a category of expenditure, right?
Mhm.
So if clothes fall in price, what do? You buy more clothes. And in fact, you might still spend 8% of your income on clothes when the price falls 20% because you buy 20% more clothes. And in housing, it's just the fact that households live in one home and not multiple ones. And we consume more on a different dimension by having a bigger home or fewer people per home or a better location or a better quality. And so we consume more of these items, but in one home item. And that's a really sort of subtle change to how you think about it. And then you realize, oh, okay, we're in categories of expenditure territory. We're in sort of like normal goods, luxury goods, you know. And it turns out housing's kind of a normal good, as you might expect, that our incomes rise. Seems silly to keep living in my cheap house in a crappy suburb when my income rises, but then drive a Bentley, and have all these fancy tailored suits. Why don't I have a Mercedes and live in a better house, right?
Mercedes is the bad car in this example.
Yeah, I know I shouldn't have chosen Bentley, right, as my starting point.
You set it too
Should
high.
Yeah. So in Australia, right, any European car is luxury, right? We're a big fan of the Japanese and Korean cars here.
Right. Yeah, I agree. I have a similar view, but I have a slightly different way. Actually, I think our very first interaction was me asking you this question if you thought that housing was a Baumol-esque problem. And and I you kind of tried to disabuse me of that view, but I'm not sure I'm totally convinced. So this is, tell me if I'm wrong
Remind me,
here.
I'm forgetting.
Okay, yeah. So here's how I think about it, and tell me if this is wrong.
Uh-huh.
So the price of goods is declining and the price of services is rising. Um, I feel like a goods inflation in the US has been negative in most periods since
Yeah.
China entered the World Trade Organization. And the fact is that prices reflect trade-offs. They're not some disembodied thing. Reflect the fact that, like, for one banana I can get two apples, so bananas are twice as expensive. And we've gotten much better at producing TVs, cars, clothes, even food, through technology, through offshoring, etc. And those same kinds of productivity gains are really hard to come by in services. Like, you can't get the person who cuts your hair to cut twice as fast. You wouldn't want them to.
Exactly.
Can't get your kid's kindergarten teacher to teach twice as fast. Like, these are, you kind of don't want, productivity gains in services. And I don't know if we could, like, technically housing is a service, at least the way it's measured in the economy, right? But like, it's the bottom line, I think, is that it's not, it doesn't catch that tailwind of globalization, because it is the most local thing by definition. And we've gotten better at building houses, but not that much better. And
Mm.
certainly we've lagged our ability to produce more TVs cheaply. And so the relative cost of producing homes has has not fallen, and because everything else, many other things have fallen in cost, the relative price of housing has been increasing, and that seems like absolutely nothing to do with. I mean, it's only relevant to supply in the sense that there's a productivity argument here.
Yeah.
And if I project that forwards, there's a couple of implications of that, if you agree with that. One is that this is not necessarily problematic, that, like, the median person spending more of their income on housing, well, they're also spending more on education and healthcare, other things that are a lot like housing from something else. We think of them as human rights. They're
Mm.
important. We tend to maximize our budgets to get as much of it as we can. Like, we spend a lot
Yeah.
of money on healthcare, partly because we want more healthcare, and same thing with education. Like, the
Yeah.
best schools. I just did analysis of schools in New York. They're extremely expensive because people have been seemingly, it's a category. They want to spend more on these things,
You're right.
and so it's not necessarily problematic. And also, the second thing is that, also keep in mind that for some contingent of the population, it is problematic, but for the median person, I don't think it's
Yeah.
problematic. The other thing is that if we project this forwards, I think that it's not crazy to me that in the idea that in 20 years, the median person will be spending 40 something percent or 50 something, the median person, of their income on housing, because I think those other categories will get smaller and smaller and smaller. I think the amount that we'll spend on goods will shrink to a tiny amount, and the amount that we'll spend on housing and education and healthcare will comprise the bulk of our spending. Is that crazy?
Um, no, I think the logic is pretty coherent and it's not far off. It's not far off where I am. You're right about services productivity and Baumol's cost disease and all that. And so a couple of things. We are definitely getting better at building physical objects to live in, as motorhomes and caravans can show you. If the thing you live in is cheaply transportable, you can have an amazing, luxurious motorhome at a much lower real price than what you could have done 50 years ago.
Mm.
The issue with housing is not the physical things we want to live in, it's the places to put them. Because I can assure you, parking that motorhome in New York is not going to be cheap or free, right? It's the places to put them. And when we do large immobile things, we're sort of doing a service sector product in an expensive location. So it's expensive to build towers in New York because it's also expensive to get a haircut, because everybody who has to live in the location to work on the site has to be paid enough to live at that location that's competing with all those other people. So the construction productivity thing, I think it's a little bit of a trick that it's kind of, construction's kind of a service business too, when you need human labor to assemble lots of small parts, even if those parts can be produced more efficiently and transported. The final assembly into a unique product is what is a service job, basically, right? So you can't really get, you can get some gains there, but they keep getting offset. Whereas if the whole thing is transportable and fits in the size of one truck, then you can get all the automated economies of scale that you get in all, you know, manufacturing, high fixed cost production line type things. So I don't know where I'm going with that, but that's sort of my issue. Now, your point is we're spending, I think, more on locations than on products, because location part is like this tournament economy. It's zero sum. There's one best location and one worst location, always. And there's always, apart from that one person, if it's Bill Gates or Jeff Bezos, I don't know, but apart from him, everyone else has this zero sum tournament to improve their location. And that's what sort of stops us spending too much, I think, of our income on housing, is we sort of get to a point and we go, well, I could win this tournament, but I'm giving up too much other stuff in terms of living in a better place. And I think, I don't know why, but if I look back at Australia, we got from 1990 to 2022. So what have we got? 32 years. Literally rent to income at the median's been within 1%, 1 percentage point of 20%. And if I go back to the 1910s, when we had our first inquiry, first parliamentary inquiry into rising rents, where they would survey manual laborers and they'd survey households and go, how much are rents? You know, it was kind of 20% then too. So if it's much, much harder to work out because just the composition of goods available in the market is so much higher right now. But if I had to guess, I would say that there is a natural limiter on the proportion you will spend on housing, simply because if you spend 40% on housing, how do you win in the tournament economy of education as well as, and all these other things, and healthcare? And, you know, there's only, every time you spend more on housing, you're giving up something else, right? And so I think that's the natural limiter there. And it seems to me that it's not going to get much more than 20%. And I think, you know, the data in Australia is a little behind the US, but you can see rents have peaked, right, in the US nationally. And in Australia, they're sort of peaking in the last few months here as well. Yeah. And I think that's because that's the limiter, right? They went up because our incomes went up and we had this jostling for position. And now we're like, oh, we're giving up a lot of other things for that. Yeah, so I just don't think it's going to go, maybe it'll go up a few percentage points. Maybe it'll be 23% in 50 years' time, because we're so into these status consumption, because goods are so cheap relative to services. But I'm just not sure, because there are other status consumption goods as well, right, that we have to give up for housing.
It's kind of confusing to me, because I've seen that same data. I've run the data from the BLS myself and found the exact same thing you found. 21% of incomes go to housing. So it is, I do see that. And at the same time, I'm a little bit confused. I need to do more work on it, because I think that the amount we spend, the proportionate budgets we spend on housing, on healthcare and on education are rising. It's a little bit confusing. I think it seems to be stable for housing, but going up for education and healthcare.
Yeah, good point. I do. So another thing that is a little bit puzzling is per share of lifetime income, right? So you spend a lot on education once, but you also earn a high income for many years because of that, right? So it's very hard to go, oh, you're spending so much of your income on education. But of course, when you look back as lifetimes, human lifetimes through history, maybe it's not that much different. You know, maybe the guy who finished high school is the same as the guy with the master's degree in terms of, lifetime income, share of income spent on education. I don't know. I've never done that.
Yeah.
I'm just always aware of these intertemporal trade-offs where we bunch everything into one period, but actually, only certain periods of your life do you spend on education, and in other periods you don't.
Right.
Yeah, it's a tricky one, honestly. And I do feel like, what we've talked about recently is just not, it's just not on the radar of the housing conversation. Where do rents come from? How do these patterns look? And I've personally found that very surprising, right? Compare it with the attention to rent to income, price to income ratios, right?
Hmm.
Uncontrolled, don't know the data source, don't know the measurements, but we're just going to compare. It's a very odd debate. What's your take on, as an outsider coming into housing debates in the last few years? Have you found it puzzling, or is it similar in bond markets? There's the same sort of attention on unimportant elements and people get caught up in it.
Yeah, I mean, there's an interesting parallel. In bond markets, we sometimes spend a lot of time talking about supply and demand. Um, but at the same time, those are mostly thought of as short-term things that move prices away from their equilibrium, which is determined by discounting a series of cash flows by their volatility, by their risk. It's an interesting parallel for the housing market. I mean, if you think about housing as an asset and you think about
Yeah,
pricing it as an asset, then a very conventional approach just says that you price it based on those cash flows and their volatility. But that's very different from how most people are talking about it. And this is a question I want to ask you about that is, um, do you find it like do you find when you're talking about your views out in the world and your
yeah.
book and your think tank, is there who tends to agree with you and who tends to disagree with you? I would imagine that people who come from a financial background, people who've worked in trading or in financial markets, in thinking about how to value assets, look at your stuff and probably think, yeah, that's like it makes sense. I don't know why this guy is like creating such a stir. And I would imagine maybe people who work in policy and social justice and planning, um, think you're kind of a renegade. I don't know. Is that right?
That's pretty close, Aziz. Pretty close. I do have a lot of friends who are housing developers and investors, and they like following my stuff because they sort of agree with it. They're like, yeah, that's what I see out there. That's pricing. That's this. That's what we would do. Oh yeah. Um, Sometimes I say something, and the social justice academic YIMBY debate, like the sort of I don't know what you call it, the non-commercial part of the conversation goes, oh, you're crazy. And then my mates go, that's like the most basic thing. Tell me something I don't know, right? About investing in property or pricing or why you do that or where the value of undeveloped land comes from, right? So yeah, you're kind of right. And I do find this a real puzzle. In the 2000s, I used to work for a big property developer. And at the time, it was kind of well known that we would lobby for upzoning and pretend that we're going to flood the market and crash everyone's price, right? It was kind of known that that is a lobbying tactic, because to get free stuff, you have to make a social excuse for it, right? So we would lobby, oh, if you do this for us, prices will come down. And then I'd go to the spreadsheets and I'd put, sale price forecasts going up, 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 right? In our feasibility model. And I'm like, oh, hang on a minute. We just told everyone prices would come down. And then I just assumed they wouldn't come down. And all of our funders believe the assumption that they won't come down. And so it was kind of taken for granted. This is just a story you tell. But now that story has become its own thing. It's totally detached from the financial reality of the industry. So yeah, I do. You're kind of right, and I don't. As you say, we think of supply and demand as an adjustment process to an underlying price reflecting the present value of future cash flows. And that's what I keep telling people. I'm like, you keep saying supply to mean a quantity of buildings, a rate of change of buildings. Like supply is just a representation of a price adjustment process of people with different expectations, right? Supply and
Mm.
demand is like a bid and an offer curve. Um, and you are using it to mean something different. And you don't really have a theory of why people even build houses or where the price of land comes from. And it just
Yeah.
blows my mind sometimes that we can get so far down this policy rabbit hole. And I fear that this story or this like panic cycle of detached writing is convenient for many reasons, right? Because politically, you don't want prices to come down, but you need to also be seen to be doing something. So here's this amazing opportunity to do a bit of a giveaway to some landowners who are your mates. And at the same time, look like you're doing like this. It's just win-win all around politically. And so there's a huge amount of incentives to not get to the detail of, oh, where do rents come from? Why do people build houses? What's the real problem? Because everyone likes prices going up. How do you support someone outside the market? Um, it's yeah. Do you think it's similar in the US, or do you think there's a I've oversimplified?
Um, well, I think that part of the issue may be, I'm not sure. I was going to say semantic. It may not even be semantic, but I think that oftentimes there's a disconnect, um, where you might be talking about this, where I think people are talking about supply. They say supply, but what they really mean, and I think this is what you're saying, they're talking about the quantity supplied. They're talking about the outcome of supply and demand
Yeah,
curves meeting at
yes,
a certain price and quantity
correct.
consumed, and that's supply. And you're
Yes.
and I think that we call I think that should be called the quantity supplied by the market. And I think that what people are actually trying to say is that they would like the quantity supplied to be higher and the price to be lower. And I think a lack of a framework is, is means that there's a lack of an explanation of how you get there. And I think that the way that you get there is one way that you get there that has to do with supply is shifting out the supply curve,
Mm.
which entails subsidies and abatements and or some way of lowering the cost of producing housing such that the willingness to produce housing at every given price is greater.
Yeah, but this is yeah. I that was really clear actually, Aziz. But I find people, the supply curve. I've written papers about what the hell is the supply curve, right? Besides willingness to sell, like we sort of impose a lot on it. Oh, it's a marginal cost curve. Oh, it's this. Um, but I fear that if it's the opportunity cost of what you give up, like it's the in your um, subjective assessment, we miss that we can subsidize people to build homes, right? But it might not change the intertemporal trade-off between building today and building tomorrow, because I get the subsidized home today and I get it tomorrow. So why would I build any faster? Because you're not changing that trade-off to make me sort of bring forward future things to today. And I think there's a
Yeah.
US academic, Evan Mast or something is his name, who said, yeah, when we offer these subsidies to housing developers, they literally offset one to one their portfolio of projects, right? They
Mm.
just go, oh yeah, we'll just take the
But
subsidized one instead and take the cash, because why would we accelerate stuff when we don't have to, right?
but what
Let's take the
if
cash.
this yeah, but if the subsidy is everlasting, if the subsidy is everlasting, wouldn't that permanently and meaningfully shift the supply curve out?
But the supply curve is, remember, the cost to you is building tomorrow, right? And if you get let's say $50,000 per unit to build today and 50,000 tomorrow, right? Well, it doesn't matter if I build more or less, I still get 50,000 per unit in that sequence over time of that optimal number per year over time, right? If you said you get 150,000 or $200,000 to build a unit, it's got to be finished in 5 years. After that, you got to pay us 20,000 per unit or whatever. Then you'll be like, oh, okay, we better get cracking because I want to take all of the units I'm going to build in 5 years to 10 years time and put them now, right? You see what I'm saying? You've got to manipulate that intertemporal trade-off. And I just don't see a way to do that in a politically sustained way, because obviously the next government's got to maintain it. The experience historically of Australia implementing any type of taxation on property has been very temporary. There's a few good examples now, but that's not sort of the historical norm. Does that make sense? You got to punish waiting.
Wrestle with it more.
Yeah, you got to punish waiting, right? So all those feasible sites that are feasible today but not developed are coming out in a sequence. And the trade-off, that marginal trade-off between building an extra one today or adding it tomorrow's pile has to be roughly equivalent, right, in the equilibrium. And so how do you, in a sustained way, shift that so waiting is harder?
It doesn't, but don't subsidies, tax abatements or whatever, don't they in every time period increase the amount of housing supplied at every price level? Like that intertemporal trade-off still exists, but isn't it shifted such that at every period the quantity supplied is higher for a given price?
It might be. It depends how things get offset in the market, right? Because everyone who's going to live in those subsidized ones isn't living somewhere else, right? And so on and so forth.
And we're back to the equilibrium.
And then the question, this is what I get, right? So I've proposed that if we want people to live in cheap, stable houses, the best thing to do is the government just goes and buys a bunch of houses or buys them off the plan and puts people in there at a regulated price, right? Because that's what you want. And every alternative way of getting there is functionally the same, but hiding that process through some kind of tax credit or anything else. So I'm like, just go.
Yeah.
Just go and build them. Literally go to any feasible site, say, you are in this, I'll buy it off the plan. Here's some good payment terms, no risk for you, get it done. And it's funny because the Greens Party here in Australia, they literally took my idea, and that's their new major plank. And I don't know what they called it. I called it housemate, right? Because we like conjoined words. We have job seeker, job keeper, Medicare, housemate. And I said, yeah, that's what we should do. And you know what's funny? The developer lobby said, oh yeah, you're just going to steal workers and offset it and take away our market, and therefore we won't build. You're just going to, there's not going to be any extra homes. You're just going to do it instead of us. And I'm like, whoa, hang on a minute. You're the guys saying that you would actually build heaps more. Why does it matter that the person here is called, Housemate Incorporated versus, Big Business Incorporated? It doesn't matter who the guy down the road is, but you're telling me that actually the guy down the road makes a difference to you because there is this equilibrium and you understand it intuitively, but you just don't want to tell us. So I did find that super funny. Then everyone's like, oh yeah, the government could build all these houses, but then they'll just crowd out all the others. I'm like, oh, hang on a minute. Aren't you telling me my point that there's a market equilibrium that's very hard to manipulate or trick people? I did find that odd.
I think one of the reasons, I know we don't have much time left, but I think one of the reasons that the upzoning, the NIMBY movement has gotten so much traction here is that it appeals to social justice folks. It's people like me, kind of like urban dwelling, kind of wonky, data oriented, pretty liberal people think that this will help poor people. And I mean, rightly or wrongly, I don't want to put my thumb on the scale, but it also appeals to people from with very conservative points of view, because it's not the government, or at least the perception is that it's not the government giving anybody a handout.
Yeah,
it's just the market working, which folks on the right love.
That's right. You're right. It's sort of a convenient story for many sides, right? It's social justice and it's the market working. Who could argue against it? And I guess I'm not really against upzoning. I'm against focusing on this as the solution to the problem with housing, the crisis as defined by being outcompeted for rent. And I don't like the giveaways involved with it. And I think my rule of thumb is no upzoning without value capture of some form, right? You got to get a little bit back. And I think that's, if your views were like that, I'd be like, it's okay, I'm probably with them. Like, but no movement stays moderate, right? It gets to its extremes. So I guess I'm a moderate on all sections. I think it's okay to have areas preserved for character, for heritage. It's okay to not bulldoze some areas and put all this new infrastructure through. I'm okay that Vancouver didn't bulldoze downtown and have freeways everywhere. But I also, I'm fine with upzoning as long as we share the gains. Anyway, let's wrap it up. We should do this again. Where should people find you, Aziz?
Homeeconomics.us is where I publish my views. If people like data and data visualization and hopefully some nice writing, they can find me there. And for my folks, where can they find you?
Fresheconomicthinking.com. Thanks very much, Aziz.
Thanks, Cameron.